Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 9th. Good morning to you, Jay, March, everyone in the room. Great to see you guys this morning. So, quick housekeeping. I am putting back Thursday's webinar. The secondary webinar with IG got pushed back a couple of weeks till the 24th. So we have our regularly scheduled webinar this week and next week on Tuesdays and Thursdays. Just wanted to give you that good news. But into the charts on the menu for today. Obviously, the DXY coming back into monthly open support. That's number one. Euro, dollar CAD, and gold from Thursday's update. We'll hit last night's update on dollar yen, dollar Swiss, and then we'll hit up crude, sterling, and Kiwi. Any other questions or trade setups, as always, feel free to throw them on the message board. So, where are we with everything? So here's what the DXY look like into the start of the week. I'll show you first the weekly chart. Interesting tidbit, the levels that we talked about, 91.01 and 91.91 into 92.28, this key region of resistance. Intra-week last week, we spiked to a high of 91.60. The close was right a hair above 91.01, which is the 2017 low. And in fact, if you take this into a line chart, right, look at that. So some things to take note of when you look at something like this. Obviously, the reversal, which peaked just ahead of the lows there, was really well defined. We loved the upslope. This is the first test, okay? So on a weekly basis, I want to see how this materializes here. But at the end of the day, we're still in this near-term uptrend. Here's what it looks like on the daily chart. So I stand corrected. We've broken that uptrend support, but here is the monthly open. Okay, so all things held constant. Here's your monthly open. You set a monthly opening range high. You're now testing the monthly opening range low. Puts into focus this 3-4 day rally that we made as the range for the monthly opening range. Weakness below this would open up a bigger drop. The 618 of the ascent off the yearly low, the January low, takes it down into 90.12. So by my part, I'm looking for a reaction here today. Here's what it looks like on the intraday chart. Initial touch looks pretty decent. If we zoom this out a bit, the pitchfork that we've been following has the 25% parallel here, 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 right there below the objective monthly open. The monthly opening range lows just a hair lower. So looking for reaction right here today. If it breaks, it would be a conviction break of the range lows. Takes again that 90.12 level, which is the 618 of the ascent. Look where that converges over the next 2 days right into that slope on the lower parallel. So it's really make or break here. We've dipped into oversold condition here on the 2-hour chart. I want to see this thing get back above overbought condition. Near-term resistance is back at 91. Ultimately, we need to breach above that 91.30 level to mark the resumptive move. But definitely, as it stands right now, looking for reaction here in the dollar. If it breaks lower, again, 90.12, there's really nothing to keep this thing afloat if that breaks. As far as event risk is concerned, you're clear till tomorrow. Okay, we get core inflation rate tomorrow. Expect to come in at 1.5%, a little bit of a downtick from the previous month, but not expected to be a major market mover, right? We'll have to reassess that one. So let me just drop this level. Don't need that anymore. Near-term resistance at 91. Any questions here on DXY? Okay, number two from that same update on Thursday was Euro. And for Euro, the main level that we were talking about here was the possibility to strike that 1945 level. So we never actually got the strike. It turned just pips ahead of that 1945 level. And we talked about near-term bearish inbound 120. Once that broke last week, kind of shifted the focus higher. Yesterday, if you guys were with me in the Daily FX webinar, I told you to look for a reaction here. You didn't get any material kickback. In fact, it sat there all the way into the close of the session, and here's the pop through. Monthly open resistance just a bit higher, whereas DXY is already testing monthly open support. Euro has not. So again, that's 21.28, just higher. Again, that would be the reversal signal for a larger turn in the euro. Let me take you back real quick to the weekly charts, right? Here was a basic 236 of the entire 2020 advance. You saw that bounce right there. Here's a little bit of an uptick. Again, monthly open resistance just higher, looking to see if we can get a hold there. Key support 1945 is still the break that we need. Here's what it looks like on the daily chart. So near-term breakout of the descending pattern after, and we spoke about this yesterday in the webinar, that outside daily reversal we made on Friday. So typically when these outside daily reversals are at the low, will be a constructive move. Typically when they're at the high outside reversal day, it suggests a move lower. So here's the pop. This is your first test of resistance. If monthly open resistance gives out, you have to be under the assumption that there's going to be a larger recovery here in the euro before we start to play off. Not making that assumption yet. Looking for barriers at 21.28 monthly open resistance. Here's the intraday chart. Okay, one more thing I just wanted to throw out there. I was looking at this earlier today. A quick extension, right, puts the 100 right here at 21.21. Guess what? Just ahead of monthly open resistance at 21.28. So big zone, I love it. The only thing that would put us back again, or the thing that would be needed to put us back again in the short structure would be a break back below 2053. Okay, those former swing lows from January, that pivot in price, put you back into the descending formation. That's what would mark resumption. But I think we need to be careful here, guys. You know, there's a lot going on in the market as far as just headline risk. Obviously, the impeachment proceedings here in the US for former President Trump, as crazy as that sounds, starts today. So we'll see, you know, I don't think that's going to necessarily move markets per se, but we are looking at this stimulus package, increase in minimum wage, a lot of these radical ideas that are kind of getting pushed through the mainstream right now. If it does turn out to be a policy shift, could, you know, offer a little bit more volatility on some of these trades. But as it stands, basic event risk, there's really nothing. Core inflation tomorrow might be a play, but really looking for broader market sentiment here on euro and the dollar. Questions? Okay. Dollar CAD. Here's another one that we covered last week. And the basic premise of this was, look at this consolidation. We're in crunch mode below multi-month slope resistance. That's the March trend line. Here's, you know, first what dollar CAD looks like on the weekly charts. We've been talking about this for a while. There's really nothing to write about here. Key support at 26, essentially 26.19. We rebounded off that, and this thing has been in a chop fest for the entire year thus far. So no real conviction here on the weekly charts. Daily looks a little different in that we broke lower, okay, for that consolidation range. Here's the drip. This was our bullish inval. So as I told you guys, we're looking for a low ahead of 127. I put this on Daily FX as well yesterday. Was that it? I'm scratching my head. Would have liked for this to drop a little bit deeper before the recovery. But not much, right? Not much to get excited about just yet here on the daily chart. Here's where things get interesting. And I was looking at this morning. I was tempted to try to take a long, but I didn't take it. Just a disclaimer. You know, this is 100 off the high. So two equal legs gives you 127.25. You kind of buckled below that a little bit. Here's the bounce. I don't know if I'm comfortable enough categorizing this as a larger recovery just because it's not at a major threshold. If this had happened here, I'd be all over it. But I don't know if I want to do anything from these levels. So long story short, guys, if you get that last drive, 26.68, 27, such a critical spot. It's a 2020 objective swing low. It's the 618 retracement of this year's range. And, you know, as we get deeper into the week, it's going to converge on the upslope. So another one where, you know, I'd want to be in it, but I'm just not quite sure it's ready. Looking at dollar positioning, broadly speaking, with the DXY and other majors, you could see a scenario where you get a little bit deeper of a slip before it starts to really assert itself. So another one that's on the watch list, you know what I mean? If we get a 27, 26.90 clip, might be looking for an exhaustion fade there. If we get through monthly open resistance, that's 27.85, guys, that would just be an objective break of the monthly opening of the weekly opening range highs, and that would objectively give us an upside bias. Remember that as far as dollar CAD is concerned, we're just working off this trend line. This is from the March highs of last year in blue. On the intraday, it's in red. But you can see it here, one touch, two touch, and then a whole compilation of touches into the start of this month keeps the focus on a break of this magenta line you see here, which is just above the weekly opening range highs. So another one, where is the drip done? Are we looking to fade this? Maybe not quite yet, but getting there relatively soon. Questions on dollar CAD? Yeah, I see your question. We'll hit dollar yen in a moment. Yeah, I mean, I'm still in it. That's well, actually, no, that limited out, but that was a great move. We talked about that in the webinar yesterday. That dollar yen really gave us something on the move down here. So I'm not really in anymore. I'll go over that in a moment. Just let me hit gold real quick. All right, so that's dollar CAD. Here's where the gold trade looks like. And we warned about this right into the close of last week. We talked about the fact that, hey, listen, we dropped into key support. This 1790 region, 1803 was our last major target. We didn't close there. We didn't close below there. We closed in there. And then we opened up the week with a rally. That rally off of key support at resistance right now. Here's what gold looks like on the intraday. So a couple things first. Weekly on the gold chart, y'all have seen this many times. We're continuing to consolidate below channel resistance, just above the 786 retracement of that bounce off last January's low, or that was November. And you know, you look at this and there's really nothing, like, you're not screaming trade or anything here, right? It's just kind of a consolidation. We need either the breach above 1909 or the break below 1763 to really open up the next leg of this unfolding trend. That said, here's the daily chart. Here's your monthly open. Monthly open spikes into slope resistance, that holds. Failure into key support, that's the 2012 high. It's the 100% extension. We talked about that for a while. Dip, and here's a test of monthly open resistance with a 38.2 retracement of the yearly range, just higher. So you're looking at like 1851 into the monthly open, which was like 1848 as resistance. Here's what it looks like on the near term. So here is monthly open. Well, last week it was weekly open resistance, 1848. We just tipped that in today's trade. Just higher is the 38.2 retracement, and those converge all day today into tomorrow on this upper parallel. And this pitchfork has been pretty damn spot on, right? Here's the 75% line, break, instant resistance, break of the median line, touches the 25% line. Median line resistance, breach, hey, once you made it through the 75%, was support. Here's the upper parallel. If gold is heading lower, okay, if the decline is not done, we're looking for exhaustion right here. Having said that, guys, I do want to say one thing. The decline has been pretty decent. We took out all the levels that we were looking at into key support. Again, recall that this was our last target, specifically because on the longer term, it converges on this lower parallel. So the magnitude of this bounce, if we do clear, okay, this parallel, if we do clear the upside of, you know, 1850, this trend line right here, 1858, you're looking at straight breakout, and that could be a resumptive move for the trade for gold. So we really have to be a little bit more cautious here, I think, specifically on the back of this rebound. This is the first 3-day rebound that we've gotten since back here. Obviously, that one fizzled out real quick and then collapsed again. But the positioning is a little different here. The positioning is a little different. So I'm very interested to see how we react up here. Again, northbound of 1852, specifically like 1855, this region here, 56, that slope would certainly shift the focus higher. But as it stands right now, the immediate advance, looking for reaction there today. Any questions? So I can't look at this, and I don't want to segue or sidetrack, guys. I can't look at this without just saying a word about Bitcoin, because this one continues to be a ripper. Traders are talking about this, and I keep hearing, and I've talked to you guys about this as well. I keep hearing and seeing commercials, okay, on CNBC, on Bloomberg, about crypto and specifically Bitcoin being the new digital gold. Look, if this is the case, we can see the positioning for both of these starting to be a little bit teetered here. So I'm not going to focus on the longer term chart here. I'm just going to give you the intraday that I'm looking at for this because this slope seems to be pretty decent, right? So just higher. This is a longer dated extension, guys, going back months. So 49,650, 49,646 converges on the 75% parallel. Near-term support right into the median line. Okay, if we buckle below this, you already got the signal and momentum, maybe a deeper cut, maybe a deeper setback, right? Not a surprise, stop traffic, talking about gold with the same similar stance, right? Maybe a little higher, but we're looking for resistance here. So even if you take the sentiment view that people are trading Bitcoin on account of capital preservation, which in my mind makes no sense from a logistics standpoint, neither here or there, we should be looking for an inflection or some sort of pivot at these highs in this rally. Okay, that is gold. Any questions on bullion heading into Tuesday trade here? All right, next, dollar yen. So here is the trade as it stood. Early in the week on Sunday, I gave you guys, or on Monday rather, I gave you guys this update. You know that as it stood on last week, heading into Thursday, I was short off this 100% extension at 105.13, real tight stop, ate that stop on the way up. Another opportunity here, and I highlighted that yesterday as discreetly as I can on Daily FX because I'm so limited. But it was a decent, again, just stop against the high. I mean, you had we didn't have divergence, but you had a really decent hold there in momentum at 60. You got the November highs stalling off the upper parallel, looking for that drop. So we've already dropped into that 38.2 sub 105. Here's dollar yen as it stands now, and here's what it looked like back then. So we're at that 38.2 now, 104.55. Last limits were on 104.70 for me. That was the objective monthly open, but this is your monthly opening range lows for all intents and purposes. Take a step back to the daily chart. That big old reversal on Friday was the tell. Okay, you had a 7-day rally, which we haven't seen in quite some time for dollar yen, into the November highs, slope resistance. Here's the turn lower. 38.2 of the yearly range is 104.55. That's what's holding support. Bullish inval on this one is still 104.18. So you can envision a scenario, again, if you're holding shorts, you might just want to be taking a little off the table, maybe bringing your stops down, not necessarily bailing per se, but levels on the downside, 104.40, 104.18, sort of where I'd want to wrap the rest up. That's a point of inflection. We want to see a stronger, reaction. I'll bring your attention to the lows that we made back here in July, spike lows that we made back here in September. Again, the actual concerted October low, they're all in this zone. So if dollar yen is going to find some support, this are the two next downside targets. We'd want to see inflection. We'd want to see hold support if dollar yen is going to hold this breakout. So nice moves. Here's again what the broader picture looks like. Again, I felt dirty yesterday talking about this in the webinar, but I don't typically get too excited about dollar yen, but hey, when the levels line up, which they don't do often, like they are now, I think it's worth paying attention to. Questions on dollar yen? Okay, that is number 5. Swissy, number 6. So for dollar Swiss, here's what we're looking at. It's the same exact play, in my opinion, as dollar yen. Only the cutback quite hasn't been as extraordinary. And I'll bring your attention again to basic monthly open support. That's 88.96, whereas dollar yen is already testing monthly open support. Euro is not far off monthly open support. DXY is at monthly open support. Dollar yen's got a way to go still, or dollar Swiss has got a way to go still. So the main level I talked about here was this bullish invalidation level at 89.19. And what that is made up of is the simple swing highs from December, the opening range high for January, the pivot and the origin of this breakout that we saw earlier last month, and it now converges on basic slope support. That's your level. It's just ahead of the monthly open. So if we sink and close below 89.19, I think you get a bigger problem here in dollar Swiss, and possibly a larger reversal play at hand if that materializes. Here's what it looks like on the daily chart. Really messy. I'm not even going to stress these slope levels anymore. I'm going to remove that just to give you some clarity. But you can see pretty simple slope support. We need to pivot right here. We need to pivot right here. So a lot of these moves, guys, on the dollar majors are contingent on the dollar catching some support here. Okay, DXY is at the lows. We have all these majors that are pushing the trend extreme. We need inflection, and we need it soon. So pretty straightforward setup here on Swissy, coming into not only lateral support but also slope support. Looking for reaction to 10 and to 89.19. Okay, we are breezing through these today. Crude, I just wanted to give you an update on, so by the way, here are the dollar Swiss levels. We're already at that 100. We broke that. Here's the 618. Again, key support right at that confluence region, just lower. No changes to any of those levels from last night. So this was last night's gold update. We already went over this. Here's crude. So the only thing I wanted to highlight here is the upper parallel. So we broke that confluence region. It was right around 56 on this rebound off the median line. And we're now testing slope resistance. Here's what it looks like on the intraday chart. Here's what it looks like on the daily, in fact. So listen, it's a breakout. As I told you guys, commodities look pretty well fitted this year in general. So I do think you are going to see further upside here in crude. But certainly from this standpoint, we've broken I think this is multi-year. I'll go back and look, slope, and we're at the upper parallel. The next major lateral level of resistance isn't until 60. So there's room if it breaches. But at the immediate moment, we're on the back of a 1, 2, 3, 4, 5, 6, 7-day advance, very similar to dollar yen. And we're certainly testing trend resistance. So look, it's not necessarily a play to the downside per se, but if you're holding longs, an area to do something, okay, looking for weekly open support at 56.94. If that holds, all right, let's see 60. If that doesn't, it'd be the first onset, I think, of a weaker play here. It's been an overbought condition for some time. And specifically, if the dollar sees a bounce, if we find some support in the dollar crosses in favor of the dollar, well, then just objective dollar strength should keep a cap on this, at least near term, right? The advance is exacerbated when you have dollar weakness because it's priced in dollars. So certainly looking for a little bit of a reset here, a little bit of a pullback on the crude trade. Again, I think we've had an extraordinary rally. Initial support 56.94. If that gives way, we'll go ahead and tack on a retracement and start to look for downside targets. But all things held constant at this point, it's just looking to see whether we get an objective weekly opening range break to the downside. Remember, this is not only the weekly open, it's also the weekly range lows. So certainly heading into Tuesday, if not Wednesday, a break below that level would be a near-term sort of reversal pattern. okay? And that is crude number 7. I do want to talk about sterling. Um, I'm going to take a quick segue here. Sterling, Kiwi, and Aussie for me are like a no touch, and that's just because of the posturing of these positions right now. So you guys know where we've been standing on sterling for a while. I'm going to take you back to the weekly charts, right? So like, what the heck is that? Is that another fake wick by the end of the week and we're back below? We've tried to break this barrier for what, 1, 2, 3, 4, 5, 6 weeks. The barrier is 36.75, the Brexit gap, which was filled, and the 786 retracement from that 2018 drop. Slope resistance, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. You want me to keep going? What is that? If this break is legit, we should see some serious acceleration here. That's all I'm going to say. It's been pent up. Price has just been really, really struggling to get through this. If we mark a daily close above, again, I think that's the breakout. Here's what it looks like on the daily chart. What I don't like here is look at this momentum divergence, guys. We haven't gotten any higher highs in price until today, and even that's not reflected per se in the oscillator. So look, it's frustrating. Sterling needs a kick in the butt one way or another. All things held constant, looking at price here, here's your monthly open. We've striked a low, failed to break the median line, and now we're pushing the high. Again, you have slope into like 38, just a bit higher, 38.20s, 38.15. And then the sliding parallel here, this is the same gradient extending off the highs, puts you into like 39. There's no lateral levels of significance in this range. And you go back in price and you look, well, when we came into here, was there any back and forth? Were there any highs or lows? No. Okay, between 39 and 38, it's been a straight shot every single time. Looking for inflection here today. This should gather pace if the breakout is legit. Not a trade for the faint of heart. Okay, don't get cute and try to short this and call the fade. This is where retail gets chopped up, guys. So as unfortunate as it is, I have to take a stay here on sterling and kind of just wait this out. It's been a messy start to the, again, here's your yearly open, guys. Don't take my word for anything. You know, there's no rhyme or reason. It is holding the broader slope that we've been tracking in sterling for months and months and months. Let me take you back. This is off the lows from September. But man, I could see a lot of people getting chopped up here. So on the watch list, on the radar, the ideal scenario, again, you know, rainbows and fairy tales, this thing spikes into the upper parallel and then moves below 36.75. That's for me the reversal signal. Otherwise, you know, it's technically a breakout. We're at fresh multi-month highs. So a tricky one here, a tricky one for sure. And the more I see retail getting involved, the more I see, you know, even just between me and you guys, even some daily FX analysts getting all hyped up about it. For me, that's just a red flag. Remember, guys, the markets do not reward the masses. And if everyone seems on board, everyone seems to love the trade, that's typically, again, a red flag. So sterling, right? And again, like I said, similar situation in Aussie and Kiwi. Here's Aussie. You know, what Aussies, let me take a step back. Aussie and Kiwi are nowhere near the same magnitude or risk, but just don't really know how to play this. For me, the hold below the median line was going to be my trade. We came off of key resistance, which we talked about for months at 78. Here's the pullback. We broke back below the median line, checked it as resistance, then checked it as resistance again. Now, here's where, you know, we could have paid a little bit more attention. The outside day reversal off the lows on Friday, certainly that is constructive, but the fact that it held slope resistance into the close had me thinking, well, maybe this is just a fake out. So here's the push, here's the push. You know, I don't really have any positioning on this, looking for resistance near that upper parallel. If we get it, that's like 77 and change. 77.65 gets you the 786 retracement of decline. Might be a nice area to look for some exhaustion, but I just do not have technical clarity or conviction. Here's the 240 on this chart right now. So wish I had more for you on this one. We're gonna have to see if we can get failure ahead of 7760s. If this thing is heading lower, but at the end of the day, again, this is your yearly range and you're slap in the middle. Anytime you look to take a trade and the conviction quite isn't there, erase everything from your head, go back and look, and go back to basics. Where are we within the range? Where are we within trend? And where is the positioning? Right now, you're slap in the middle of the monthly, of the yearly range. And again, Kiwi, Aussie, and Sterling, all untouchable in my opinion. Here's Kiwi. I showed you guys this last week. We were working with this pitchfork. We had just rebounded off the lows, looking for resistance, looking for topside exhaustion ahead of 72.30. That's what I told you guys yesterday. So what's this? Is that a breakout? If it is, that low should hold and we should be off to the races. I don't see that happening. So what do you do? Technical clarity just isn't there here. Take off that 618, and I'll take off this slope at this point as well. Here's what we're looking at. And for the longest time, and again, you'll hear, the newbies and, guys talking about, oh, it's a consolidation breakout. Okay, cool. That might be the case. Series of lower highs, series of higher lows. If that's the break, again, losses should be capped by 72. And we're off to the races. I'm not really trying to take a short dollar exposure from here as DXY is at the lows. So all of these conflicting signals puts us in a predicament on all three of these trades. And they're Aussie, you guys know Aussie is one of my favorite pairs to trade in general over the history of my career. It's probably been where I've placed most of my trades. But Kiwi, Aussie, and Sterling right now, high risk, guys. Again, my humble opinion, but just high risk. So one note I did want to just add to this chart is weekly open support converges a little bit later into tomorrow and Thursday at that former slope resistance or whatever you want to call it, but see if we can't get a play there or pivot there. So one last one where we don't have quite much to work with here. Last but not least, I did give you an update on peso last week as we were coming off of upslope resistance, and the major focus here was right here on the daily chart. If we take this to the daily, these trades go under the table a lot of times because people just don't, we don't bring our attention to it. But here it is, really strong. Again, this was going to be a big level that we were looking at, major pivot in price. Here was the turn. Here's the upper parallel, a little messy, right? But still holding. And the premise of that trade last week was, well, we hit the upper parallel, looking lower from here. So 100 converges on the 618, just lower. That's at 94.96. The 100 comes in at, 19.94.96. The 100 comes in at 19.96.86. So nice little region. You guys know these are my favorite Fibonacci confluence regions, the 618 off the high, 100 or 618 off the low, 100 off the high. That's a real sweet spot for me. I'm looking for inflection there. If it breaks lower, look for the dump off. That being said, again, the magnitude of the rally, where it happened, when it happened, if this holds, you're looking for a weekly opening range break to the upside to give you a validated breakout. But right now, for the focus on this one on the radar charts, to get this thing down into that 1994, 1996 region and look for a reaction there. Okay, that's everything on my end, guys. So a couple of duds. Again, I'm really not too thrilled with Kiwi, Aussie, and Sterling, but I do think you get some clarity this week. Dollar, yen, euro still sort of central focus. I'm looking to see how this gold plays out, but let me take Marchin's questions here. Kiwi CAD looks like this. So I'll tell you what, Kiwi CAD, as it stands right now, is of immaculate monthly opening range. I mean, Marchin, here's your monthly open. SPX, I didn't cover it, Jay, but I'll take a look for you, sure. We're in uncharted territory here, but I'll definitely take a look. I have some slope that we're working with. So the monthly opening range here is, I think, all we need to pay attention to. Key resistance 92.82 into 92.52. Okay. This is just going to be the objective swing highs from March 2019. And this is a 1618 off the advance off the lows. Also is the yearly range highs. You got slope up there. So I think this one is the same. I'm reluctant, Marcin, to mess with it because Kiwi's involved, and my lack of clarity on Kiwi kind of steers me away. So all the Kiwi crosses that you're talking about, to be honest with you, I would be hesitant. But put a gun to my head. This is, upside resistance. I'd be looking for exhaustion ahead of here. That's just my part. Let me see if there's anything compelling here on the near term. Hold on one sec. Nope. Treat it as a range. Don't get too involved. It's one of those trades where I still think you could get some more upside thrust, Marcin, but man, it's still at risk for fading. It's still at risk. You're still into uptrend resistance. So even if it holds, not necessarily a short, but you might just kind of snuggle up into this for a while before something happens. So be careful on this one. All things held constant, your January opening range is the breakout zone for this. My humble opinion, Marcin. Look for a break of the January range for guidance on that one. Euro pound, the grandpa trade, which saw a one-way move since the start of the year, essentially. Here's your yearly open. Just popped and dropped. It's now at the 618 of a multi-year Fibonacci trade or Fibonacci extension. I guess not multi-year, excuse me. That's just the 2020 range. Here's the 618 at 87.47. Could be something to work with there. Pretty decent play along the median line. Pretty decent play along the 25% line. A little bit of a gap below, but we're still trading there now. A drop from here, you're essentially looking for that 86.49 level. One other thing I want to check out. Bear with me one sec. Okay, the 100's already there. Get rid of this. Check out those levels for a while. I would still put bearish invalidation up at 88.79. Okay. Watch for a break of that little zone right there. Yeah, 86.50 comes up big if we break lower from here. But on account of that fib support zone alone, I'd respect that one. All right, Marcin, your next one was pound CAD. Oh, no opinion, completely neutral. Both assets are completely off the rails for me. I'm not going to touch this. Both pound and CAD are kind of still doing their thing. Look, I think you can get CAD weakness moving forward because of the dollar CAD trade coming into support. right? So if dollar starts to rally, CAD weakness moves higher. This one is the major threat for the breakout in that scenario if sterling continues. And again, you're coming up on these levels where it, like it looks like a breakout, March. And what are you going to do? Buy at the highs here? And even if you were, where's your stop? All the way down here? That's a tough one to get into. You're looking at some interesting pairs, I'll tell you that much. Here's some levels to consider on the upside. Support, key resistance. Again, mid-range trades, not my cup of tea, right? The last one that you wanted to look at was Euro Kiwi. I'm a little bit more inclined to actually give this some credence because of where it is, again, on the broader spectrum here. Here's what it looks like on the daily chart. So by my part, this one looked like a clear-cut break last week as it broke below the 67-64 level. I think you were asking about this, Marchin, is the only reason I was looking at it. So that clear-cut break was followed by an outside day reversal higher yesterday, right? So we tested that 67-64 level as resistance, then we moved off. This interrupts, okay? This interrupts things. So we could be in for a larger recovery. Monthly open resistance is way up here, just above 69. So for me, it's all about this inflection here. If we buckle back above 67, 64, look for the recovery margin. I think ultimately you do sell that recovery, but at this point, momentum is just grounding into just below, dribbling below 40. You could make the argument that this is strong divergence, right? Here's a lower low in price, and here's actually a slightly higher low in the oscillator. Certainly puts a red flag on that one as well. Let me just check out the near-term chart for a moment and see if there's anything here. Yeah, here's your weekly opening range. If it breaches higher again and it buckles back above that resistance zone, I think you look for the near-term recovery. So watch this one on Euro Key. And again, on all of these pairs, Marchin, I'm not the one who is always a big fan of correlating Euros doing this versus this and this and try to figure out a bias based on relative positioning. But certainly on this trade, the Kiwi, man, it's really important if this is a breakout or not. If it's not a breakout, all those Kiwi crosses, you want to curb your appetite for Kiwi strength. So just be careful if you're looking at those crosses to take into account the relative performance. So Jay, SPX, like I said, we're in record territory here, so I don't have any lateral levels to look at. Here's the slope we've been following. I showed you guys this one yesterday in the webinar on daily effects, basically coming into these upper parallels. So it's still there. You know what I mean? It's still there on the upshot. 3970s, 3965 is going to be where you're looking for the next upside level of resistance. On this here, there's really not much. The high day close previous to the high we just made gives you 3856. That's near-term support and bullish inval, in my opinion. So look, everyone's going to keep talking about all these headlines in the stocks guys markets, whether it's GameStop or whether it's what the implications are for regulations moving forward, all that good stuff. Everyone keeps talking about the rally. Well, again, you know, this is when the rally will show wavering advances, and I think that's what we're seeing here. So I would just be on the look. It's still constructive above 38.55. No one can take that away. But you know, if you're not already long from a positioning standpoint, I don't see it. I don't see how you could justify taking any positions here on the long. Now, if we were to spike into that upper parallel, looks like pretty decent. Looks third touch resistance by basic trend line. You talking about this, right? So I see that from November and Jan. Okay, you're going way back here. You could say that, sure. You could say that too. Yep. Remember, 2 points is always speculative. 3 points confirmed. So whether you're using that one, or I would actually just be using the near term slope right here, just because also the gradient is pretty close to where we're at with that pitchfork we've been following from. Again, this is the November lows. Insane. That thing is still there. But yeah, I mean, you could still see another maybe peak, touch, and pull back. The whole point is that I mean, here's the daily chart, guys. You don't need me for anything. Here's the daily chart. If we breach, again, it's record territory. There's tons of room, but I don't want to buy here. At the same time, you're going to fight the 7-day uptrend on divergence, mind you. Higher high, higher high, higher high, lower high, lower high, lower high. Don't take my word for it. It's there in plain sight. So, man, guys, these are the times where we need to be super careful. I really can't stress that enough. Just as the masses start to get super excited, the markets start to really rip, this is when the propensity for retail to get chopped up. So if you're not any positioning, don't get FOMO, okay? Calm down and chill out. We'll get tons of opportunities. I think the market is just prepping. 2021 is shaping up to be an awesome year from a trading standpoint. So the levels will come, the setups will come. We need to be patient on trades like these, guys. If you tread on it, tread light. Again, this is one of those times where you want to be trading like a quarter or half of average position size until we get some of these trades really starting to move through these levels. But Jay says, okay, thanks a lot. Hey, you're more than welcome, Jay. And I love the strat you're taking. So here's actually, it turns out I had that trend line on the daily chart anyway. So I'm with you. It's just not justification in and of itself, Jay, in my opinion, to try to fight the trade. Now, if we get some more signals intraday, maybe another spike, a third reference point would be beautiful if we spike higher and fail again. But you know, you want to look for as much factors, as much technical evidence that there's a turn underway. I just don't think it's there yet. That said, yeah, I'm looking for a pullback for sure. I've been looking for a pullback since the start of the week. So maybe a little bit higher. Maybe I preempted the move a little bit like I did on that dollar yen last week, but ultimately, I think we're in for something good in the days ahead. Okay. Guys, I will wrap it up there. Jay, March, and Steve, Ted, everyone in the room, thank you so much. As always, I will see you guys on Thursday. Again, that webinar is back on, so we'll try to update things, and hopefully after we get that core inflation number tomorrow, we clear things out. We kind of get a little bit more clarity, okay, on where we are, specifically with sterling, guys. One other thing I'll say on sterling, you do have the GDP numbers out of the UK coming out on Friday. So, yeah, these breakouts ahead of major event risk, I don't know. Again, sterling, Aussie, and Kiwi, guys, put those on the back burner right now. Keep a close eye. I'll keep you updated on the SB squawk line and on the intraday charts, and I will see you back here on Thursday morning. Best of luck trading, guys. Cheers.